Fast-moving consumer good companies effected a price rise of 10 to 15% over the past few months. They also slashed the weight of biscuits, juices, and several other packed items to make for the loss being incurred due to the rising input cost. Almost all the spices have seen their prices increase in double digits over the last 1 year. Chili powder rose by 12.6%, while garam masala surged 15.6%, according to data from Bizom, a retail intelligence platform. Prices of turmeric, jeera, and coriander increased 11.6%, 12.7%, and 16.9% respectively during the last 1 year. In the essential food category, prices of milk have gone up by 5.4% over the last year period, while that of atta and bread have risen 8% and 12.3% respectively. Branded bathing soaps and detergents, which come under the essential non-food segment too, have seen double-digit increase in prices in the past 1 year. Rising prices have also affected drop in consumption, especially in the rural areas. FMCG companies reported decline in volumes across categories in the last couple of quarters. According to a Nielsen report, volumes shrank 4% in the March quarter, led by a sharp drop in the non-food category. In the June quarter too, volumes remained under pressure. FMCG giant HUL's first quarter sales growth was largely driven by price hikes, while the underlying volume growth was muted at around 6%. Godrej Consumer Products Limited and Marico too said they expect a volume decline in mid-single digits in the first quarter. Experts say FMCG volumes might have contracted around 5 to 8% in the June quarter.
We expect some recovery happening in this quarter itself, towards the end of this quarter. The end of this quarter would also mean beginning of the festive season. Typically, from mid-August onwards, we'll see the onset of festive season. We expect volumes to go up then. There are 2-3 reasons behind it. First reason is after 2 years of lockdown, this would be the first year when people would be freely going out. We are very hopeful that this would be a festive season where people would really venture out after 2 years, and the buying would be really good. So that's one big hope as far as FMCG companies are concerned in terms of revival of demand. Secondly, the concern last year, I'm talking about last financial year, was also being partly driven by the slowdown in growth or tapered growth of rural India. Thankfully, because of 2 reasons, we have seen strong revival in demand in rural India. Demand revived in rural India. We have seen a very strong revival in rural India, demand in rural India in last 1 quarter, and hopefully given the situation and with the onset of festive season, that would improve. So second half of the year is when we see a very good recovery or complete revival.
Palm oil, one of the key commodities used in FMCG products, has come down to about $1,200 per metric ton from the peak levels of $1,800 to $1,900 per MT. So, is the worst behind for the industry, and could there be any relief for consumers going forward? Akshay D'Souza, Chief of Growth and Insights at Bizom, said a slight decline in commodity prices in some categories is likely. However, there is no pressure on companies to ease the price burden. FMCG companies might look to focus on effective rates by offering higher value to the consumers at the same price to boost volume growth. There could be a competitive pressure on the companies in terms of offers and schemes ahead of the festival season. Beating analyst estimate, HUL on Tuesday said its standalone net profit for the quarter ended June 2022 was up 11%. HUL MD and CEO Sanjeev Mehta said, while there are near-term concerns around inflation, the recent softening of commodities, monetary and fiscal measures taken by the government augur well for the industry. India's rural areas contribute 35% to overall FMCG sector sales. If the monsoon is good and steady over the next month, it could result in higher rural incomes and up rural consumption.
See, one of the things that will play out for FMCG companies, not the direct produce companies, for example, edible oil, wheat, whether the products are direct, right, branded, that will have to pass on. That will pass on because that's the major cost structure. Where you are a component of the cost structure, chances are that they will hold on to the prices. And I think, and I'm saying this across entry-level packs, mid-level, or even high-level packs, they will hold on to prices. But what they will do is they will start creating more consumer offers or secondary scheme offers for retailers to pick up more. So you will see them starting to play a lot more on consumption-driven schemes and offers, which will kind of spur that usage of the product. So I think that is something that will happen pretty quickly. And as we enter festival, I will see that in fact becoming a key strategy playing out going forward.
Amid inflationary pressures, the recent decision to impose GST on pre-packaged food items of up to 25 kg like atta, paneer and curd could add some pressure on volumes in the short term and also make items costlier for the consumers. A recent report by ICICI Direct Research said that prices of commodities may fall in 3 to 6 months due to the rise in interest rates globally. FMCG companies are betting heavily on the festival season to boost overall volume growth, and a demand revival on the back of good monsoon could augur well for the industry.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
यार
मत पूछ यार,
फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 Paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.